See, the thing is, you can find zones anywhere on the chart, but you need to know how to identify the best ones. And that comes down to 3 steps. You need a break of structure, followed by some sort of liquidity, and then the zone needs to be unmitigated. And if you don't understand, I'll show you on the charts now. So the first step that makes this a valid zone is we get a nice strong break of structure to the downside. That means this low we broke to our protected high becomes a zone. But now we need to check if it's good or bad. Well, the second step is that liquidity. So we need price to tap in, but a very shallow tap. We need to leave this zone unmitigated and then continue lower with the trend. And you can't ask for anything nicer than this. Can you see we barely tapped this zone and then continue to break structure to the downside? Now this is good because a lot of noobs, okay, they're gonna put this as their protected high. This isn't real structure. This is liquidity, inducement, whatever you wanna call it. And the way that we can tell this is simply liquidity and not structure is by the last step. We can see this tap here left this zone completely unmitigated, okay? We have all these orders in here still left to be filled. So now as we sweep this and come into our zone, this is where I enter my shorts, put my stop loss above this zone and target a lower low. And look at that, you catch some beautiful trades. You need to be able to tell how to find good zones from bad zones and good setups from bad setups. And you can do that by taking my free setups rating guide. Just comment the word guide and I'll send it over to you.